Good morning, good morning, good morning. It is Wednesday, the 14th of May, all day. This is the Morning Blast with myself and Mr. Michael Brown, where we jumpstart your trading day with a review of yesterday, a preview of today, and maybe an odd chuckle or two. But before we get underway, I will get the legals out the way. As usual, nothing discussed on this space session constitute trading or investment advice or infers any kind of endorsement by PIQ, myself, Ryan Paisley, or the magnificent Michael Brown.
Oh dear. Very good morning, Ryan. Good morning, everyone.
Hello. Oh dear, what? What's wrong?
Well, no, these introductions get more flamboyant and extravagant every day, I think.
Yeah, I'm slowly becoming a morning person. I'm not sure what's going on there. No one's more
Oh,
surprised than me, but yeah.
I thought you were going to say slowly becoming a moron, but you got to that point a long time ago.
Wow. Wow. Yeah, there's me calling you magnificent. Yeah, that can change. That can
Sorry,
change.
normal service had to resume, I'm afraid.
Yes, yes, it's true. It was going to be a bit unnerving us being nice to each other. Yes,
It
yeah,
was like
quite
a
right.
Trump cabinet meeting. We were being very sycophantic.
Gobble gobble. Oh God, right, quick,
Oh
moving on.
no. Oh God. Yes, let's move on from that because that is only going to deteriorate from there. Very good morning, everyone. The risk rally rolled on yesterday with the S&P 500 closing up by around 0.7%. The tech sector leading the way with the Nasdaq up by about 1.5%. Both of those benchmark indices now trading back in the green year to date. All is right with the world once more. Incidentally, the Dow, excuse me. The Dow,
Bob
which
Fleming here.
well, I was going to say that's because I'm mentioning the Dow. I've got an allergic reaction to it. Which we, for a very good reason, we don't mention very much on the program. The Dow actually ended yesterday down by about 0.6%, and this was all due to a 17% decline in the share price of United Health, which is the third biggest stock in the index. They suspended their guidance and got rid of their chief executive for personal reasons, which is never a particularly good sign.
Right.
The reason I mention this is because it's just yet another example of how completely pointless and futile the Dow is, and frankly, anyone who looks at it or even trades it, I mean, go and give your head a wobble at this point. There is a very good reason why no money tracks the index, and frankly, it's long past time that we shuffle it off into the retirement home where it belongs. With that,
To be honest, I could see you and the Dow kind of just like feet up, slippers on, Werther's original.
coexisting
Yeah,
pipe
yeah. No,
next
exactly
to
that.
a fire, rain
Yeah.
lashing down on the windows
A
outside.
little mangy little dog that kind of like,
God,
Anyway, so that's a picture for you. Right, moving on.
really is. God. With that mental image now firmly implanted on our heads, I can tell you that selling pressure continued across the Treasury curve yesterday, although weakness was led by the long end yesterday, with 10-year yields rising by 3 basis points to 4.5%, and the 30-year yield getting perilously close to the 5% handle, topping out at about 4.96% yesterday. Of course, you'll recall that 5% seemingly a bit of a line in the sand for the Trump administration, or at least it
Yes.
was when they pulled a big U-turn on the quote-unquote Liberation Day tariffs back on the 9th of April. Elsewhere yesterday, it was more of a classic risk-on day in the foreign exchange space, with the dollar soft against most peers, the dollar index testing the 101 figure to the downside, and in fact breaking below that figure in early trade this morning. The Antipodeans leading the way higher, with the Aussie and the Kiwi up by about 1.5% apiece, but pretty much everything was firmer against the greenback yesterday, with cable reclaiming the 133 handle and euro dollar testing 112 to the upside. In terms of fundamental catalysts yesterday, to be honest with you, they were considerably lighter than they had been, for quite some time now, really. Certainly on the trade front, there was really no major developments that we at least haven't already covered on this call, although, of course, the market continuing to digest this truce between the United States and China
Yes.
after the tariff rollbacks that we saw on Monday. In terms of developments yesterday, on the data front, the highlight was the latest CPI figures out of the United States, and it was a relatively benign CPI report for April, with both headline and core prices rising by 0.2% on a month-on-month basis, both a touch below market expectations. Meanwhile, on an annual basis, headline CPI came in at 2.3%, 1%, below the prior 2.4 and the slowest annual rate of inflation since back in February of 2021, while core CPI that rose 2.8%, in line with consensus and also in line with the prior figure. The one thing I would say, well, actually, two things I'm going to say here. The first is that this certainly won't see the Fed budge from their ongoing wait and see approach, given the elevated degree of uncertainty that continues to cloud the economic outlook. The second thing is that when you dig into the data, we did actually see the very, very tentative signs of some tariff-induced price pressures beginning to emerge. And this was most evident when you look at goods prices, because core goods deflation, which had been underway since the back end of 2023, that has now come to an end. Core goods prices actually rose by 0.2% on an annual basis in April, and you would expect that trajectory to continue moving to the upside. Even though the China tariffs have been rolled back significantly, the average effective tariff rate in the US is still somewhere in the mid-teens, which is the highest level in many, many decades, and it will still have an inflationary effect. In terms of other bits and bobs from yesterday, we did have some data out of Germany, the latest ZEW sentiment surveys, the expectations metric. That rose to 25.2, double the consensus expectations. But the current situation number, that fell to -82 from a prior -81.2. So very much a case of give with one hand, take with the other there. In terms of news flow yesterday, of course, President Trump continuing his trip around the Middle East, speaking in Saudi Arabia yesterday. Not going to go through everything he said because he spoke for far too long and said far too many things. The three things I will mention, though, is that firstly, he has announced an investment commitment from the Saudis of around 600 billion US dollars. Saudi Arabia says that they are working on boosting the total investments to $1 trillion.
With a T.
With a T, indeed. I guess the most notable part of this is about $150 billion worth of spending on US defense products, which I think is one of the biggest, if not the biggest, defense deals that the US has ever done. Trump was also talking about equities yesterday. Again, he said, and I quote here, "It's amazing what a rising market will do, and it's going to go a lot higher." I'm really loath to even mention this, but sample size of 2, and he's got a 100% hit rate on his market calls. So as mental as it is, it's something that I feel like we have to pay attention to at this moment in time. Certainly a much better hit rate than I've had over the last month or so, that's for sure. And when Trump had finished his address at this investment conference, he decided to take to Truth Social and start waffling about the inflation numbers. He said, and I will just read out the truth, very, very much in keeping with Trump's familiar rhetoric now, saying, "No inflation, prices of gasoline, energy, groceries, and practically everything else are down. The Fed must lower the rate, like Europe and China have done. What is wrong with too late, pal? Not fair to America, which is ready to blossom, question mark. Just let it all happen. It will be a beautiful thing." God only knows what's going on here, to be completely honest with you. I mean, as I said, very much in keeping with Trump's
The thing is,
long-standing desires for lower interest rates.
you would say it's the ramblings of a drunk man, but he's teetotal. So, yeah, what's going on?
Well, I've honestly got no idea, to be completely honest with you. And also, the other thing that he doesn't understand, because he's a complete moron, is the reason Europe are cutting rates is because the economy is in the toilet. The reason China are cutting rates is because they're effectively bracing for long-standing headwinds stemming from trade
Well,
tensions.
but
The
let's
reason
be
the Fed
honest.
aren't cutting rates is because the economy is in rude health.
Let's be honest, and then we've got the same over here with Keir Starmer, who after the BOE cut rates was praising that the BOE keeps cutting rates, as if that's a good thing.
Yeah.
Not kind of realizing that the reason they're doing that is because they're not really too keen on what the current economic trajectory is.
No, it is absolutely bonkers. But there we go. Of course, that will not alter what the Fed are thinking in any way, shape, or form. That kind of goes without saying. But we do just bear in mind here from Fed Chair Powell, he is speaking tomorrow afternoon. So do just keep that on the radar. A few other things from me this morning, all on the tech sector, which is brilliant news because, of course, this is my specialist subject. The first is reports via the Wall Street Journal, very worrying reports actually, that Apple, they are looking to enable iPhone control with neural signals captured by a new generation of brain implants. This new capability would basically mean that rather than you sort of tapping away on a screen to control your iPhone, the iPhone will be able to detect what you're thinking and
Oh
then
God.
bring that up
Oh God.
on your phone.
Oh
What
God.
on earth could possibly go wrong with that one? I think, Ryan, just for yours and everyone else's safety, you should probably go and buy one of those old Nokia things at this point.
Well, or that, or just keep putting, like, make a nice tinfoil fedora so it can't read my brainwaves.
Yeah, just put yourself in a Faraday cage or whatever they're
Yeah,
called.
that's it. What's wrong walking around with a big like chicken wire around my head as I'm walking around Needle Street?
It's for his own safety. Just don't worry about
Yeah.
it. Sticking with the tech sector, CNBC reporting yesterday, Microsoft, they are looking to cut 3% of their global workforce. For context, they had about 230,000 employees as of the last update. They are basically just looking to reduce layers of management within the firm. The stock was pretty unreactive to that news yesterday, actually, which was a little bit surprising. We also had news on the chip sector yesterday. The United States, obviously Trump, as he continues his voyage around the Middle East. He'll also be dealing with the UAE at some point. The United States reportedly now considering letting the United Arab Emirates buy over 1 million advanced NVIDIA chips. Apparently, someone or something called G42, no idea, would get 100,000 of NVIDIA's best chips every year through until the end of 2027. Unsurprisingly, China hawks in Washington, D.C. have raised potential security concerns around this deal. This is according to Bloomberg sources, and by China hawks, I assume they mean Peter Navarro.
Yeah.
And lastly, in a little bit of M&A news, Samsung, they are set to conduct their biggest overseas takeover in 8 years. They are buying a company called Flact Group in a $1.5 billion deal. Flact Group are a European heating and cooling specialist. So it seems that finally the South
Oh
Koreans are
God.
warming up to the prospect of a bit of
Oh God.
M&A, but
Oh,
you
oh,
can't rule
stop.
out that they
Oh,
might still get cold feet over the whole thing.
stop. Oh God. That was two puns in one. I can't think. Um.
That's the
Okay.
only
Yeah.
reason I included that
Yeah. No. Do
story,
you know what?
as
This
you
is the
may
thing.
have
And
guessed.
I was sitting here thinking, why the fuck's he talking about the Samsung M&A? And then it dawned on me, and I was like, oh
Air
no.
conditioning, mate. That's,
I could
I'm
see
all
it.
about that nowadays.
I could see it a mile off. Well, thank you for that, Mr. Michael Brown. And so I'll crack on with some overnight news headlines from our dear friend Zach. As always, do subscribe to the Overnight News Roundup, which is our Substack, which is compiled by Zach. All the overnight news headlines that matter to markets whilst you were sleeping. Before I do crack on, though, because Michael just finished with Trump in the Middle East, whilst we've been on air, or just as we started, Israel has issued evacuation warnings to Yemeni ports after the Houthis lobbed a missile over during Trump's Gulf visit, despite the ceasefire agreement. So the fact that they're issuing the evacuation warnings probably means a big boom is coming soon. But anyway, moving on to some trade
God,
headlines.
you've actually just tweeted that as well, haven't
Yeah, yeah,
you?
yeah. Well, mate, well, I've got to keep myself busy while you're rattling on.
Technical as ever, Ryan.
Yeah, well, yeah, like, I don't like to use big words, mainly because I'm scared of them. Anyway, trade news. Trump says he may negotiate directly with China's Xi on the final US-China trade deal details. In my opinion, of course he will, because he'll want to take the credit for sealing the deal. So that makes perfect sense. White House advisor Hassett says Trump will announce next trade deal within 20 to 25 deals in progress. China criticizes US UK trade deal. This was in the FT last night for potentially excluding Chinese products from British supply chains. Okay, well, how about China sort out a deal with the UK themselves? US warns global companies using Huawei AI chips that could face criminal penalties for export violations. Portside braced for demand surge as businesses stockpile goods during the 90-day US-China trade ceasefire. US rescinds AI diffusion rule, citing harm to innovation and diplomatic relations.
Uh,
China, go on.
oh, sorry, I was going to say that. Well, at least according to the sources reporting we had last week, they are going to replace that with something else before anyone gets too excited.
The AI diffusion rule.
Yeah.
I love how we kind of know what's going on there, but yeah, great one. Not really our remit, to be
No,
honest.
not at all.
I'm still not entirely sure what AI stands for.
No,
China
and
and
I
Colombia.
know Tom Talks Cars has given up listening to this as well, so
Yeah,
we can't
yeah.
even get any help from him.
and rightly so. China and Colombia sign a Belt and Road cooperation plan after Beijing's presidential meeting. Just on this as well, Brazil yesterday, obviously Brazil are kind of really trying to cozy up to the US at the moment. They've kind of signed the Belt and Road initiative with China, but they've done it all bar name. Basically, they want all the benefits without getting the irk from President Trump. India prepares defense against US copper import curb case, citing ample domestic supply. Interesting one, that one, because obviously Trump has been stepping in on, to try and diffuse the ceasefire, diffuse the conflict and instigate a ceasefire between India and Pakistan. And now India are kicking up about copper from the US. Macro. Trump's approval rating rises as economic and recession concerns ease. That's according to a Reuters Ipsos poll. Traders are abandoning Fed cut bets as the US-China trade war cools and the tariff inflation impact weakens. Goldman Sachs, they say that Trump prefers oil prices between $40 and $50 per barrel based on social media analysis. House Republicans near compromise on state and local tax deduction for Trump's economic package. Sticking with Trump's tariff projected to cut California's tax revenue by 16 billion with a B by the next fiscal year. That's according to a state memo. China, they're scaling back yuan support as trade tensions ease, missing analyst estimates for the first time in 2024. Chinese firms turn to bank loans for funding to cut costs amid market uncertainty. Moving over to Japan, Japan's wholesale inflation hit 4% in April, signaling price pressure for the BOE rate hikes. Moving over to ECB, ECB's Villeroy sees room for additional rate cuts by the summer to support economy. South Korea's think tank, they are halving the 2025 growth forecast, citing US tariffs as a major risk. Moving on to some geopolitical news. Geopolitics, Macron is open to discussing French nuclear weapon deployment on European allies' soil against Russia. That's just what the world needs to be hearing. And I'm sure
Is he also deploying some white flags across
do
European
you know what?
soil as
As I
well?
mentioned that, I was like, I bet Michael makes a white flag joke.
Mate,
Very
it's
possibly.
rude not to. I mean, you
Well,
mentioned France, you mentioned Germany. We're going to laugh at the data. These are the
I'm
rules, Ryan. Come on.
I make you right. I make you right. China to propose new peacekeeping commitments from and UN reform support. NATO, their allies are drafting a deal to boost defense spending to 5% of GDP, addressing Trump's demands. I'm old enough to remember when they were trying to boost it to 2%. So this is great news for companies that are already benefiting from the current situation, such as Rementile and stuff like that. So want to keep an eye on for the defense names, especially European defense names. China may develop orbiting nuclear missiles within a decade, capable of reaching the US. That's more good news, I guess. Fucking hell. Equities, let's move on from that diabolical news. Apple's iPhone 16 sees discounts of up to $351 on Chinese e-commerce platforms to boost sales. Tesla to ship components from China to the US for the Cybercab and semi-truck production by month end. Sticking with Tesla, their board forms committee to review Elon Musk's compensation, eyeing new stock options. American Eagle Outfitters scraps their 2025 outlook due to unpredictable consumer spending. That's according to the Wall Street Journal. Baidu to test Apollo Go's driverless ride-hailing service in Europe for the first time. Huawei operates 20 semiconductor fabs in China, including 5 processing 7-nanometer chips. That's according to the ELEC. Samsung, as we heard, are going to acquire Flat Group. We'll move on quickly before Michael brings out another pun, but their
Don't worry,
target,
I'm not going there again.
their target is AI data center cooling demand, which seems to be a bit of a hot topic at the moment. See what I did there?
Jesus.
Samsung Foundry may secure 2-nanometer orders from Nvidia and Qualcomm, nearing valuation completion. Sony, they're forecasting flat profit, just like their screens. Hit by US tariffs are raising expected operating profit growth. And finally, for me, Woodside Energy explores Saudi Aramco stake in Louisiana LNG product after collaboration deal. I've got no pun. I just threw that in there.
I wonder where that was going. Well, thank you
Yeah,
very much, Ryan.
if I had time to think about it, guys. I'm a bit distracted this morning. I'm not sure why. I think I've been like nearing sneezing for about the last 15 minutes. I think it's the pollen.
Yeah, I was going to say that's why I probably sound a little bit hoarse this morning. I think my hay fever's playing up, but never mind. We soldier on. Let's.
Yay!
Oh God! In terms of today, this is not going to take me particularly long to run through what's going on today because the data docket is very, very quiet indeed. In fact, there are no notable economic releases through either the European session or the North American session today, which I'm sure
Yes.
comes as very, very good news to most market participants. Nevertheless, of course, President Trump continuing his tour around the Middle East, so we do remain on alert for headlines, whether they be on trade, geopolitics, or frankly anything else that he wants to talk about. We do have some speakers on the docket today as well. The Fed's Jefferson, Daly, Waller, and Goolsby due to make remarks, along with the ECB's Escriva, Nagel, and Holtzman. And then in terms of corporate earnings before the open today, we hear from Tencent, obviously the big Chinese tech conglomerate. And then after the market closed today, we are due to hear from Cisco, and we're also due to hear from CoreWeave. Now, the reason I mentioned CoreWeave, they are, of course, a data center, AI data center operator. They had, frankly, a bit of a mare with their IPO a couple of months ago. They ended up
Oh
getting
yeah. I
NVIDIA
thought that
to
then.
basically backstop the whole thing. So it will be interesting to see what their earnings say and also whether they have anything to say about the impact of tariffs as well. But for the time being, that's your lot from me.
Just one thing to note, obviously, we've got the GCC, the Gulf Council meeting summit today as well. So no doubt plenty of headlines on the back of that. So keep an eye out for that as well. No better,
Yay.
yeah, as usual, no better way to keep up with the news than the PIQ platform. And also, as I mentioned yesterday, a little Easter egg, if you go to piqsuite.com and you look to the right of the screen, and you see a little green square, click on that, and that's our new look mobile site that we're currently beta testing. And it's embeddable as well. So if you have a website and you want it embedded on your site, give me a nudge and I'll sell it to you nice and cheap. But anyway, Michael, thank you as always for being your magnificent yourself. Listeners, thank you as always for checking in and listening to us. Hopefully, we've provided some value and maybe a bit of a giggle. Whatever you're doing today, keep it safe, keep it tight, and we will see you all tomorrow. Much love.
Indeed. Bye for now.